Hello everyone, my name is Ira P. Aguilar. I'm the first reporter. So my topic is all about the ASEAN Central Banks. So ASEAN was established on August 8, 1967 in Bangkok by the five original member countries: the Indonesia, Malaysia, the Philippines, Singapore, and Thailand, to accelerate economic growth, social progress and cultural development, and to promote peace and security in Southeast Asia. So the other five groups joined the Southeast Asia is the Brunei, joined in 1984, to be followed by the Vietnam in 1995, Laos and Myanmar in 1997, and lastly the Cambodia in 1999. The Association of Southeast Asian Nations, or in short, the ASEAN, is a regional organization of 10 Southeast Asian and Pacific Rim countries whose governments collaborate to promote socio-cultural, economic, and political advancement in the region. ASEAN is an official observer of Asia-Pacific Economic Cooperation, or the APEC, a 21-member economic group that promotes free trade and sustainable development in Pacific Rim countries. ASEAN countries have a total population of 650 million people and a combined gross domestic product, or the GDP, of $2.8 trillion. The group has played a central role in Asia's economic integration, spearheading negotiations among Asia-Pacific nations to form one of the world's largest free trade blocs and signing 6 free trade agreements with other regional economies. Yet the experts say ASEAN's impact is limited by a lack of strategic vision, diverging priorities, member states, and weak leadership. The bloc's biggest challenge, they say, is developing a unified approach to China, particularly in response to Beijing's claims in the South China Sea, which overlaps with claims of several ASEAN members' fundamental principles. We have here the 10 different central banks of ASEAN. So the first one is the Authority Monetary Brunei Darussalam. Brunei Darussalam Central Bank, or formerly known as the Monetary Authority of Brunei Darussalam. The establishment of the AMBD in January 2011 as the Central Bank of Brunei Darussalam brought the task of implementing monetary policy and supervising the financial institutions under one roof. As one of the principal objects of the AMBD is to ensure the stability of the financial system, the Authority Monetary Brunei Darussalam monitors the situation in the Eurozone closely and has identified the impact of possible contagion effects and shocks to Brunei's financial system. So far, the financial institutions in Brunei do not have direct exposure to European government debts, and they remain sound, well capitalized, highly liquid, and profitable. The next one is the National Bank of Cambodia. The National Bank of Cambodia was established on December 23, 1954, after the country gained independence from the French protectorate and after the institute the emission. Bank's duties include inter alia, management of monetary and exchange policies, the regulation of banks and financial institutions, and the control of the national currency, the real. The bank was established in 1954 after the Indochina printing institution closed when Cambodia obtained its independence from France. The third one is Bank Indonesia. Bank Indonesia, or the BI, is the central bank of the Republic of Indonesia. Peri Warjio is its current governor. BI, or the Bank Indonesia, was founded on July 1, 1953 from the nationalization of the Jabest Bank, 3 years after the recognition of Indonesia's independence by Netherlands. The next 15 years, Bank Indonesia carried on commercial activities as well as acting as the nation's national bank and is in charge in issuing Indonesian rupiah currency. This came to an end with the Act Number 13 of 1968 on the Central Bank, transforming Bank Indonesia as a central bank. The Javest Bank was operated as a private bank and individuals as well as industries, etc. It could get help in the bank's offices. Bank of the Lao PDR. The Bank of Laos was formed on October 7, 1968, located in Vientiane. Bank of the Lao PDR is the central bank of Laos, and it is also the bank of last resort, controlling the money supply, managing the country's reserves, and supervising the commercial banks operating in Laos. The bank is managed by an executive board, a governor, and a deputy governor. Zonekse Saipakse. Bank Negara Malaysia is the Malaysian central bank established on January 26, 1959 as Central Bank of Malaya or the Bank Negara Tanah Melayu. Its main purpose is to issue currency, act as banker and advisor to the government of Malaysia, and regulate the country's financial institutions, credit system, and monetary policy. Its headquarters is located in Kuala Lumpur. The federal capital of Malaysia is mandated to promote monetary stability and financial stability conducive to the sustainable growth of the Malaysian economy. The next one is the Central Bank of Myanmar. The Central Bank of Myanmar is established on October 1, 1947 and it started business on February 3, 1948 and it was reorganized in 1967 as the People's Bank of Union of Burma. Reorganized as Union of Burma Bank in April 1976 and it was reconstituted as the Central Bank of Myanmar in 1990. The Bank Regulation Department was established on January 1, 2001. The headquarters of the Central Bank of Myanmar moved to Naypyidaw in 2006. The aim of the central bank is to control the price stabilities in domestic market and to preserve the internal and external value of the Myanmar currency, the kyat. In accordance with its aim, the central bank also endeavor to attain such objectives so as to promote efficient payments mechanism and the liquidity, solvency, and proper functioning of a soundly based financial systems, and to foster monetary, credit, and financial conditions conducive to the orderly, balanced, and sustained economic development. The Monetary Authority of Singapore, or the MAS. In 1970, Parliament passed the Monetary Authority of Singapore Act, leading to the formation of MAS on January 1, 1971. The passing of the Monetary Authority of Singapore Act gave MAS the authority to regulate the financial services sector in Singapore. MAS, or the Monetary Authority of Singapore, has been given powers to act as a banker to and financial agent of the government, and it has also been entrusted to promote monetary stability and credit and exchange policies conducive to the growth of the economy. In April 1977, the government decided to bring the regulation of the insurance industry under MAS. The regulatory functions under the Securities Industry Act of 1973 were also transferred to MAS in September 1984. The Monetary Authority of Singapore is now administers the various statutes pertaining to money, banking, insurance, securities, and financial sector in general, as well as currency issuance. It was established in 1971 to act as the government of Singapore's banker. The next one is the Bank of Thailand. The Bank of Thailand was the first set up as the Thai National Banking Bureau The Bank of Thailand Act was promulgated on April 28, 1942, vesting upon the Bank of Thailand the responsibility for all central banking functions. The Bank of Thailand started operations on December 10, 1942. The Bank of Thailand Act was later amended in order to put emphasis on Bank of Thailand's social responsibility to create a mechanism to guard against economic crisis, as well as to set up BOT's decision-making process to ensure good governance and transparency in the organization. The Bank of Thailand Act, or the BE 2551, came into force on March 4, 2008. The next one is the Bangko Sentral ng Pilipinas. The Bangko Sentral ng Pilipinas, or the BSP, is the central bank of the Republic of the Philippines, and it was established on July 3, 1993, pursuant to the provisions of the 1987 Philippine Constitution and the new Central Bank Act of 1993. It has since then functioned as the country's central monetary authority that enjoys fiscal and administrative autonomy from the national government. Under the new Central Bank Act, the BSP performs functions such as liquidity management, currency issue, lender of last resort, financial supervisions, management of foreign currency reserves, and determination of exchange rate policy. It also acts as the banker, financial advisor, and official depositor of the government and its political subdivisions and instrumentalities and government-owned and controlled corporations. Currently, the BSP provides policy directions in the areas of money, banking, and credit, and it supervises the operations of banks and exercises regulatory powers over non-bank financial institutions with quasi-banking functions. The State Bank of Vietnam is the central bank of Vietnam, and it is currently holds an about 65% stake of VietinBank. And the State Bank of Vietnam is the country's largest listed bank by capital.
Hi, I'm Angelica Adison, the next reporter. Today I will be discussing about the inflation targeting history. Inflation is the rate of increase in prices over a given period of time. Inflation is typically a broad measure, such as the overall increase in prices or the increase in the cost of living in a country. Meaning, inflation is the decline of purchasing power of a given currency over time. The rise in the general level of prices, often expressed as a percentage, means that a unit of currency effectively buys less than it did in prior period. Inflation is defined as the rate at which the currency value falls, and as a result, the overall level of prices for goods and services. Inflation can be contrasted with deflation, which occurs when the purchasing power of money increases and prices decline. The meaning of deflation is a general decline in prices for goods and services, typically associated with a contraction in the supply of money and credit in the economy. During deflation, the purchasing power of currency rises over time. The first Asian country that I will be discussing is Cambodia. There is no inflation rate, consumer price index, annual variation in percent, end of period, and there is no inflation, producer price index, annual variation in percent, but there is inflation rate, consumer price index, annual variation in percent, which is 3%. What caused Cambodian inflation? The result indicates that food inflation and headline inflation in Cambodia is influenced by the food inflation and headline inflation of trading partners in the short run and long run. Money growth also fuels inflation when the economy is overheating. The next one is Singapore. The inflation rate Consumer Price Index annual variation in percent end of period is 0.2%. Inflation rate CPI annual variation in percent is negative 0.5%, and inflation Producer Price Index variation or annual variation in percent is negative 6.9%. What caused Singapore inflation? The high growth of the population in Singapore, the growth of the economy and the growth of GDP, hike in taxation, and the increase in the prices of transportations. The next one is Malaysia. Inflation rate CPI annual variation in percent end of period is 1.7%. Inflation rate CPI annual variation in percent is 2.1%, and inflation PPI annual variation in percent is negative 1.1%. Why does inflation happen in Malaysia? Higher global financial crisis and higher global commodity and food prices are the main external factors that give the impacts on higher inflation rate during that period of 2016 or the year 2016. The fourth one is Myanmar. Inflation rate CPI annual variation in percent is 7.0%, and there is no inflation rate CPI annual variation in percent end of period, and inflation Producer Price Index annual variation in percent. What causes inflation in Myanmar? The basic causes of demand pull inflation include increase in money supply, increase in government purchase, and so on. When there is an increase in demand side excess rather than the increase in the supply side, the country's overall price level will increase, and thus this situation will lead to inflation. Last one is Indonesia. There is no inflation Producer Price Index annual variation in percent, but there is inflation rate Consumer Price Index annual variation in percent on end of period, which is 3.0% or 3%, and inflation rate CPI annual variation in percent, which is 3.5%. Why does Indonesia have high inflation? Main factors that causes inflation rate in Indonesia are fluctuation of fuel prices, growth of money supply, and growth of gross domestic product. Thank you for listening, and that's the end of my report, which is Inflation Targeting History.
I'm Merleline T. Hipolito, and my topic is international reserves. International reserves are any kind of reserve funds which central banks can pass among themselves internationally. International reserves remain an acceptable form of payment among these banks. Banknotes, bonds, treasury bills, bank deposits, and other government securities are all examples of foreign currency reserves that a bank can have in foreign currencies. Countries use foreign currency reserves to keep a fixed rate value. They also need reserves to pay external debts and remain liquid in case of crisis. Foreign exchange reserves are a country's reserve funds in case of an emergency such as a currency devaluation. Many countries also use international reserves to back liabilities, including local currency as well as bank deposits. These assets held by the country's monetary authorities are usually denominated in different reserve currencies, mostly the US dollar or USD, the euro or EUR, the Japanese yen or JPY, Chinese yuan or CNY, and the British pound or GBP. Asean countries' foreign exchange reserves 2016. 2016, Philippines had $80,666,000 US dollars. Cambodia had $9,113,000 US dollars. Indonesia had $116,369,000 US dollars. Malaysia had $94,481,000 US dollars. Myanmar had $4,886,000 US dollars. Singapore had $251,058,000 US dollars. Singapore was the highest among the ASEAN countries that I mentioned, and Myanmar was the lowest. Philippines was higher than Cambodia and Myanmar.
Hi, this is Rainy Ann Mendoza and I was assigned to discuss the gold reserve of ASEAN countries. Gold reserve are countries' gold asset held or controlled by the central bank or the treasury of the country. Here are some importance of gold reserve. Number 1, gold reserves is used to hedge against inflation. It simply means that government is buying a large amount of gold when the country starts to experience high level of inflation. Second, gold reserve determines imports and exports. It means that any currency is strongly connected to the value of its imports and exports from the country. When imports exceed exports, the value of the currency will decline, and likewise, the currency will appreciate when net exports are higher. Kaya naman po, ang country na nag-export ng gold and has an excess of gold reserves will see an increase in strength of its currency and gold prices rise. As a result, the value of total exports become higher. The third one is the gold reserves determine the value of its own currency. The value of nation's currency is strongly tied to the value of its imports and exports. Kaya naman po yung mga country na nag-export po ng gold or has access to gold reserves will see an increase in the strength of its currency when gold prices increase, since this increases the value of the country's total exports. The last one, gold reduces the value of that currency used to buy it. If the central bank of a country imports gold, it influences the demand and supply of fiat currency in the country. This will lead to a surplus supply of currency, causing inflation in the country. For example, if the Reserve Bank of Singapore imports gold, then it will result in inflation in Singapore. Total gold reserves of ASEAN countries in 2016. Philippines had a total of 196.34 tons. Singapore had a total of 127.40 tons. Indonesia had 78.7 tons. Malaysia had 38.26 tons. Cambodia had 19.56 tons. The last one is Myanmar. Myanmar had a total of 7.27 tons.
Hello classmates, hello Ma'am Kat. This is Julian Mercado from Group 11, your last reporter in ASEAN Central Bank in terms of lending facility rate. So, ano nga ba ang ibig sabihin pag sinabi nating lending facility? So, lending facility is a mechanism o ito ay isang paraan ng mga central bank to fund the banks or financial institution that were approved to conduct a business by the U.S. Federal Reserves. And central bank use the lending facility to increase their liquidity in a long period of time. And in lending facility, we have the overnight rate. So overnight rate is the interest rate at which a depository institutions, generally banks, lend or borrow funds with another depository institutions in the overnight market. Overnight rate wherein in many countries, the overnight interest is the interest rate na sinaset ng central bank in order to reach their target monetary policy. And when one country wants to help the economy to get out the recession, it will lower the overnight rate to encourage those banks to borrow more money. That can lead to those banks to lower their interest rate. The lower the overnight rates kasi, it leads to an increased economic activity. And the higher the overnight rate kasi, it leads naman to reduce the spending and a slower economic growth. So as you can see, in the year of 2016, Philippines got the 6% of lending facility rate, which is napakataas. And in Indonesia, in the year of 2016, they got
the 8%. Grabe, 8% of lending facility rate.
So, in comparing Philippine and Indonesia lending facility rate, the Philippine lending facility rate is on the left side of your face, which is the blue lines, and the Indonesia lending facility rate is on the right side on your face, which is the black lines. So, as you can see on the chart po, Indonesia has the highest lending facility rate of 8% than the Philippines na 6%. But mataas na din yung 6% na lending facility rate ni Philippines. But as compared to Indonesia, no, napakataas, 8%. Akalain natin yun. Siyempre, it is more expensive to those lenders. But it is a good indicator naman to the health of the country overall in the economy and the banking system of a country. And lastly, I am really sorry po because I was not able to show the other ASEAN lending facility rate due to the lack of resources. That's all. Thank you.
So, to rank the ASEAN Central Bank in year 2016, in terms of inflation targeting, Singapore is the first or the best performing in terms of inflation targeting among the ASEAN countries because of their lowest inflation rate of negative 0.50%. And Myanmar is the worst performing because of their highest inflation rate of 7%. And in terms of forex reserves in 2016, Singapore is the best performing at the second time in terms of the forex reserves. They got the higher forex reserves of $251 million, and also at the second time, Myanmar is the worst performing in terms of forex reserves among the ASEAN countries because of their low forex reserves of $4,866 million. In terms of gold reserves, Philippines is the first or the best performing in terms of gold reserves among the ASEAN countries because of their highest gold reserves of $196 million. And the second best performing in the ASEAN countries in terms of gold reserves is Singapore of $127 million. And Myanmar has the lowest gold reserves of $19 million in the year of 2016. Lastly, in terms of lending facility rate, Indonesia got the highest lending facility rate of 8% than to the Philippine lending facility rate of 6%. As a result, Singapore is the best performing country among the ASEAN countries in the year of 2016. And the worst performing country among the ASEAN countries is Myanmar.